Great to have you all here. This is a fascinating report. There's a fair bit in it. I get the impression there's not much in it that radically shocks people, but it's a very interesting sort of concentration on where the banking sector's at in these three areas. I'll start with you, Tony. When it looks in the economic context overall, I get the impression it's saying that, we know the RBA's increased the cash rate significantly in the last little while, but the bank net interest margins remain around the same level. They're, of course, a key measure of profitability. What's this telling us about the degree of competition in banking in Australia at the moment?
Well, thank you for having me. I think it's telling us that competition is alive and well. The report, I assume, alludes to consumer banking, and as an international competitor in this particular space, I think it's healthy and something that the industry has come together on and not shied away from. That's leading to customer outcomes, which is keeping everyone, allowing us to achieve our collective ambition. I would probably call out though that on corporate banking and wholesale banking, we've seen even a more pronounced reduction in the net interest margins as competition continues to grow in that particular space as well. Overall, I think it's healthy, and as an international player, it's been, and returning home from a couple of years abroad, actually 20, it's been really encouraging to see just both how collaborative the industry has been around its threats and risks, but also the prevalence of competition and how that is leading to better customer outcomes.
Fiona, I've heard it described by some as fierce competition in the space at the moment. And what are ABA members seeing in the market when it comes to this?
I'm glad you stayed up and read it. Yeah. There's going to be a test later. We want to make sure everyone has gone through and read all of this.
Absolutely.
And absorbed all the different ways our customers are banking. I mean, there's no doubt, many of you who would be readers of the AFR, there are very strong competitive forces in the banking sector at the moment, and customers clearly are the beneficiaries of that. A lot of that competition is really strong, in mortgages. We've seen, I think, something around 615,000 mortgages refinanced in the past year, and that is either with your own bank or people switching to other banks. But I think there are other themes here as well. So it's not just about customers being price conscious, although of course they are. They're also speed conscious. They want, to get a loan faster. They're looking to get their home loan approved quickly, or their business loan. And they're also really demanding about new technology, the latest app and all of the features and services that are being provided in technology. So competition isn't just about price, it is also about those other services that customers will increasingly expect from their bank.
Hessel, the report came together because the ABA partnered with Accenture to put this out. You do a lot of this work with a lot of banks and banking industries around the world. The R word, resilience, is often used describing the Australian banking sector, how it survived various challenges over the last decade or two. Where does Australia sit internationally on the resilience scale, and what are the reasons underpinning any impressive resilience we do have?
Yeah, great question, Adam. Look, I think there's probably two main factors. There's a bit of design and a bit of luck in the resilience of the Australian banking sector, and we've been very lucky, to escape the worst, of some of the crises that we've seen overseas. So on design, and John Lonsdale did a great job yesterday talking about this as well. We've got a really strong and effective regulatory framework. And, especially the financial system inquiry led by David Murray in 2014, which then led to the unquestionably strong, CET1 benchmark of 10.5%. That has been a major factor. We've got very strong banks that are very well capitalized and therefore, financially resilient. And the other part that I refer to is a bit of luck. We've had, about 30 years of economic growth in Australia. And obviously when we've got, a strong consumer and business sector that reflects on our bank's performance as well. So we've had that growth where there have been crisis moments, such as GFC and COVID. Our government has stepped in very effectively and forcefully. And I think the combination of those two, in combination then also with prudent bank management, have led to a really good outcome for consumers.
Tony, we've got the big 4/5. We've also got a very healthy, as Anna alluded to, mid-tier and smaller banking sector. But we also have significant international players who have a footprint in Australia. What impact does that have on both those two issues, competition and resilience? And you'd see with your bank how it operates in Australia and in multiple other jurisdictions. So what are your observations there?
We operate in 62 different countries. For most of those countries, we've been going for 158 years. We've got a very storied history in many of them, and so the ability to leverage on lessons learnt. Probably as an observation, having returned to Australia, what is the role of the responsibility that an international player has to both Australian consumers and the Australian market? It would be remiss. We're not adding value to the Australian consumer nor the Australian marketplace if we just want to be an Australian bank on a smaller scale. We have to leverage whatever superpower that we have, and it's our opinion that the Australian economy future superpower will be its internationalism. You know, we know 30% of us are born overseas and 52% of us either have a parent born overseas. We know 45% of GDP is directly linked to international trade. Well, we believe as an international that our ability to support consumers or corporates is going to be leveraging that international know-how. And so partnering the domestic banking universe to fulfill a need is where we see our role. And I believe that's where internationals do have a part to play in the domestic landscape.
When we pivot to how customers bank, I mean, the digitisation is what leaps out of the report here. Both the Australian government has a goal of becoming a top 10 digital economy in society by 2030, so it's set as an ambition, a light on the hill, and the numbers speak for themselves. What do we see about digitisation fee in this report in the last few years in particular?
It's really incredible to see how much digitisation encourages people to be constantly engaging with their bank. So one of the critical stats in here shows a 37% growth in interactions since 2019. So that just shows that it's much easier. You're able to go into your phone and check your balance or cancel your card, transfer a payment. You know, those sorts of activities are just happening at speed and happening all the time. And perhaps the other feature here is that people really trust their bank with their information. A lot of our consumer research shows that people trust their bank more than government, more than healthcare, certainly more than social media companies to keep their information safe. And perhaps that's a reason why customers have really come on speed and really engaged with their digital banking at speed.
Hessel, are we there yet? Is the finish line on digitisation just moving further away at pace? Where do you see this on the data here continuing to go?
Well, certainly, you know, there's that continued growth, and as Fiona was saying, you know, that 37% growth in interactions, you know, that can't continue, right? At some point, you know, you're almost plateauing on the digital growth. Similarly, yes, you know, that growth in digital wallets. But what is important in this is, despite the decline in branch interactions, despite the decline in cash usage, branches are still part of the mix. You know, cash is still a payment instrument going forward. So I think what is really important for the banking sector is that digital growth does not mean digital only, and it just makes that difficult for the banks in terms of a balancing act. Continue to invest in digital, while also upgrading our sort of, call it, legacy instruments and legacy channels.
You're doing some work in New Zealand at the moment, which is same but different to Australia in some ways. Similar sorts of numbers of branches per 10,000. We've got slightly more in Australia. A much more urbanised population in New Zealand. When you look at New Zealand, what leaps out as different or similar to the Australian story?
Yeah, I mean, obviously, when we've got a discussion in a pub between an Aussie and a Kiwi, we can, disagree on a lot of things, but I think we've got more in common than what's different. And definitely, actually, the urbanisation rate is pretty similar. We've got both countries with large sort of urban centres, and then, quite empty, rural areas as well. New Zealand and Australia both, were adopters of, card payments, digital payments, etc. early as well. And in both countries, what we're seeing is that actually branch usage is declining more quickly than that branches are being closed. So if we're looking at the Australian numbers, we've seen in the report that between 2019 and 2023, branch usage dropped off by 47%. Now, since 2017, we've closed branches at a rate of 28%. In other words, people are, using the branches less, and the banks are following with closing branches. It's the same in New Zealand. So, the consumers are leading the charge and the banks are responding.
But my older daughter's 19. I can't recall her setting foot in a bank. She might have, when she was 4 or 5, come in with me one day when I went in or something, but she could be part of that first generation of people who never interact with a physical branch. Sure. Tony, 99% of all interactions Australian bank customers have with banks are now via digital channels. You see Australia and around the world. Where are we at sort of world pace on that? Brett King shared some observations last night.
He sure did, and just touching on something Hessel just said, we've repurposed the bulk of our branch network, for instance, in particularly in the Middle East, as countless service sectors to support digital banking, something that Brett actually touched upon. It's a trend that we're starting to repurpose across ASEAN, so it's not about less branches, it's about repurposed branches. And what was interesting in the stat deck, which did concern me as a dad, is that I saw that 86% of Australians, of 21 million of us, now have a social media account of some sort, which is interesting, both opportunistically and concerning.
Are you mainly a Twitter or a Snapchat guy yourself? What's your major social media footprint?
Yeah, I'm really big. I mean, before I got this gig, I didn't even have LinkedIn, and my head of comms, who's sitting over to the right here, was absolutely panicking. I had to have a lot of media training, and obviously it didn't work. Let's pick up ASEAN. Let's use ASEAN as opposed to Australia. There's 680 million people we know in ASEAN with an average age of 32, compared to 450 million Europeans with an average age of 44. 40 million people moved on to internet usage in ASEAN alone last year. They're not using cash. They're not using branch networks, and they are under the age of 32, as I mentioned. So the adoption of UPI, as we're seeing in India, which was discussed by Brett last night. We have our own tool in Hong Kong, which has a ridiculous penetration called PayMe. You now do payment in Hong Kong, it's PayMe. You use that brand like we do the hoovering. And then you have Plasma and the likes in Japan and Alipay in China and the like. So I think what is key, which the majors are doing, which the industry is doing, is keeping an eye on offshore trends and making sure that we either create organic or inorganic opportunities to compete with those non-bank players.
Well, let's pivot now to cash and that third pillar of this report, how customers pay. Brett spoke about this last night, the explosion in mobile wallets. What are we seeing, Fee, about the decline of cash in this report and more generally in the sector?
What's happening with cash is really interesting. You will see in this report that in 2007, I think 70% of payments were used with cash. People were using cash. And that decline has been so quick that now it is around 10%. And it's projected to get to around 4% in 2030. But cash on issue is increasing. So even though people aren't using it for payments, they're holding on to it. I don't know about your family. My dad has this massive stash in his cupboard. I'm always telling him to go and put it in the bank. But for whatever reason...
Which cupboard?
Well, I won't tell you where he lives. That'll be our secret. But there's just almost this anxiety of just perhaps having it there just in case. And look, and maybe there is a level of pragmatism there too. If people have experienced natural disasters, recent bushfires or floods, and they haven't been able to use digital payments, having some form of cash on hand can be something that's really important. But you can see there that people will just continue to hold on to it but not actually use it for payments.
And Brett spoke about the mobile wallet last night, Hessel. I think the advantages of the mobile wallet are obvious. There are challenges around regulation, around compliance. What do you see as the key issues on what seems to be an inevitable growth in the mobile wallet space?
Well, look, in the last 5 years, mobile wallets pretty much have grown, at 100%, year on year. So it's been out of, from a very low base, overtaking ATM withdrawals, in that short space of time. And I think, in some ways we haven't quite caught up, with that consumer usage of wallets. And, wallets are now a big part of the payment mix, and all our other payment instruments are obviously closely regulated and overseen because of the utility function that they have for our society. And it does make sense to say, well, if we use wallets to that extent, do we need to consider, for instance, data security issues? Do we need to consider resilience? Do we need to consider pricing and commercial frameworks and access for everybody as well? So absolutely, with that growing importance, I think we need to treat mobile wallets like we do other payment instruments.
We were sitting, Tony, not far from each other last night while Brett was talking, and Brett's obviously fairly evangelical in this space compared to some people, but he was talking about, if we look ahead, these mobile wallets then become, with AI implemented, your various arms of your own finance just talking to each other, shuffling money around without you knowing, making sure things are available, talking. Is that a space, can you see that happening sometime in the realistic future, or is Brett getting very excited about a potential that might take a while to realise?
It's been my very limited experience that we overestimate the opportunity that technology provides in the short term, and we underestimate it in the long term historically. However, this time things are different. The gloves are off. For instance, we've heard numbers, consultancy firms talk about billions of dollars spent. You only need to look at our annual reports as to how much we spend. We will have 25,000 technologists this year alone, co-piloting on 5 to 1,000 different user cases within the bank. But the interesting part will be, for me, from my perspective, will be agentic workflows. How do you create singular ecosystems that allow to tap into all the best parts of, for instance, new technology like large language models to come up with holistic solutions? There are segues into that. Many banks, including ourselves, have, for instance, a digital corporate card that a CFO can have and issue that to 15 or 20 or 100 staff members, and at any point in time have F9 functionality as to what the outstanding balance is, as opposed to waiting to put in, for instance, your report and submit your receipts. So I see a lot of what Brett was talking about having a lot of sense and coming very quickly, but from our perspective, we've got a ton of non-strategic applications that require retirement well before we start talking about coming up with new ones that house them all in one singular function.
You were talking earlier, Fiona, about people trusting their banks and trusting their banks with their data, etc. At the same time, there's an interesting chart here showing that since launching in 2020, the uptake of CDR, the consumer data right, remains absolutely minimal, and less than 1%. 3 or 4 years into the rollout of that. What do we take from that?
I think we have to be very honest about what's happening with CDR. Despite best intentions, and certainly by our members and government, it really hasn't reached its potential. It's extremely low uptake, and particularly looking at the investment that's been made across the sector, it is not a great outcome on any measure. And I think also perhaps since this conversation started, since the previous government looked at this issue, people are a lot more nervous about their data, and they're not lining up in droves to transfer it through this regime. So, but they are using the new payments platform. They are obviously using digital wallets. So banks have to invest where their customers are. So we'll be having conversations with government in future months about how to really try and extract value from it, but also minimise our regulatory burden versus what customers are actually using it for.
I see you nodding there, Hessel. What are your thoughts on that topic?
Well, yes, it's a really interesting contrast. For instance, mobile wallets versus CDR, and it's just interesting. One of them, that uptake has been consumer-led, whereas obviously CDR, that was not necessarily driven by consumers pulling the sector that way, and that's, I think, a very important lesson here. And if customers do see very important use cases using CDR, they will use it, but that needs to come from the demand side, not from the supply side.
Tony, the report drills into a number of key issues impacting the industry, regulation, technology and the like. What do you think, Tony, will be continuing areas of priority and focus for the industry?
You heard it from the chair, and you've heard it from the speakers over the last 24, 48 hours. Resiliency, protecting customer outcomes, ensuring healthy competition for best customer outcomes. I think they'll be the obvious priorities for the next 12 months. Diving into the climate situation, insurability, diving into ahead of July next year, CPS 230, to protect the industry in aggregate. There'll be nothing new. I don't expect, and I'm hoping for no idiosyncratic shocks, but the industry is definitely coming together behind those themes. Protecting customers is going to be key.
Fiona, the media overnight's already grabbed a couple of tidbits out of this, and they're leaning. So what are the things that have attracted the opinion writers and the columnists in the last 12 hours from this?
I think particularly just that decline in cash has really attracted the attention of media, just to see how, incredible speed that is occurring in terms of people going online and using digital wallets, and the massive decline in the use of cash for payments. That's the particular theme that's of interest. And of course, the other really important component is what banks are doing to help protect their customers while they are going online in droves. You will have heard Anna and the chair yesterday talk about the scam safe accord that banks are investing in, rolling out confirmation of payee, more warnings and delays, major expansion in intelligence sharing. All of those are really critical priorities for the industry in a digital economy.
I'm imagining with this having just dropped on the tables this morning, people haven't had enough time to digest and have any questions they want to ask. If anyone does want to ask a question of the panel, just throw your hands in the air right now, and if I see one, we do have one down the back there. What would you like to ask, mate?
Yeah, hi. Nick Giotto from the ABA. Tony, you talked about the way HSBC is repurposing your branches to pivot to sort of support that digital-first experience for customers around the world. When you look at the role of government in some of that, in terms of helping or hindering that process, what are your observations about things like digital identity or open banking in terms of, leaning in, leaning out? Is it customer-led?
I think Hessel...
Yep, you're right.
I think Hessel answered that. I think the 1% take-up that the report leads to, just touching upon CDR and open banking, speaks for itself. I don't have... Money eloquently put it yesterday, the mid and the international's aggregate of starting point of $500 million spent on something that 1% of customers have taken up so far. Imagine if that $500 million had been spent to supporting the majors with cash in transit, or coming up with other solutions to protect customers online, or coming up with new products and product development, user experience. So I think that in itself, I think the report does the talking on that particular point. I can't talk on government's role with regards to repurposing of branch network, and that wasn't a global, that was a trial with, as I mentioned, in the Middle East, but that is a proprietary and a business decision.
I've completely failed to read the room. Turns out there are some questions. Over the back there, the microphone's found a home. What would you like to ask?
G'day, Corey Odom, Council on the Ageing. I just want to unpack this 0.9% of people who aren't doing online banking and apps transactions, and sort of draw attention to the fact that we keep talking only about transactions and we don't talk about customers on that stat. So we seem to lose sight of how many customers is actually that 0.9% equating to. The rest of the report sort of gives us some insight to 29% of people over 75 still doing withdrawing cash over the counter, 13% 65 to 74. Do you know of that 0.9% for transactions that aren't online, what that equates to in customer numbers?
Hessel.
Yeah. And actually, I don't have the report in front of me, and I thought I knew everything that was in there, so I can't give you the number. But what I can say is, clearly the decline in cash usage and intensive cash usage is, across segments. So different age groups, metro versus regional, different income groups. So, there's not a particular segment of customers that will continue to be high cash users. The people that use cash have, other things in common, which is, for instance, they're fleeing domestic violence, or they want a safe store of value in case of a crisis, or they've got privacy concerns. And those are all legitimate reasons for, a number of people to continue to use cash and use it intensively. And that's, I think, why it's important, recognizing that we're not talking about cashless, right? We're talking about less and less cash as a result of the decline. But, the sector, needs to and will continue sort of to plan to provide cash services for those that want to use it. So, and that is a small but important group of customers that will not be ignored.
Fiona, you've lived and breathed this from inception to it dropping on the desk this morning. Is there anything else? Is there any other thing that jumps into your mind you want to point out to people that might not grab the big headlines, but is something interesting that leaps out from this report?
Well, just to help answer that question as well, it's very clear in here that although we are seeing a huge acceleration to the digital economy, banks are still maintaining a very expansive branch network across the country. It's still very high compared to our other OECD countries. And of course, the role of Australia Post as well, the 3,400, I think it is, outlets across the country where people can do banking services. So there will still be those points of presence for customers who want face-to-face banking services and to go into a shop front.
It's there on your table. Have a look today. Come and have a word to Fiona or anyone else from the ABA if you want to know any more details of what's in there. Please give Anthony, Hessel and Fiona a big round of applause. Thanks, guys. Wonderful discussion.